Hello everyone, good morning. Today is Tuesday, October 18th or 17th. Let me check. 18th. I'm going to be talking a little bit about today's price action and today's only... well, actually there were two trades, so we'll talk about both of them. But with my steps, I'd say there was only one in New York and actually one in London that we'll also discuss. And let's see, as I mentioned yesterday, or well, through the week's forecast, I'm expecting a bearish week. Reason why I was expecting mostly sells. In the middle of the day, I did kind of change my bias. I was thinking mostly looking for buys because price was basically just going higher and was looking buy side liquidity. So I was interested in maybe participating in those moves, but as we'll discuss now in a minute, you'll see that we actually never really had opportunities to buy, basically, right? Let me hide all of this for a sec. Yeah. So why was I bearish? 50% of daily impulse already taken previous week's high as liquidity. Daily fair value gap being mitigated. A little bit of a range in here, as you can see. Price took that, and then we see changes in direction. Price was simply going lower, and that's really pretty much it. So let's toggle this so you can see the sessions. Cool. And let's see, remember my 5 steps, these they are, basically. I've taught them through most recent video. I think this is the first video. Well, actually I did do the ad for the private community, but basically this is the first video after the 3-hour long video. And based on the 5 steps, let's look at what happened through London first, because we had something really clear that I am really jealous of those that actually were through London able to take advantage of this. And as you can see, we have clear buy side liquidity, taken, a little bit of a range, retracement lower. Do we have market shift? In my opinion, we do, maybe below that low, but we don't see aggression, we don't see displacement, we don't see a fair value gap being created, so nothing for us to do. Then aggressive move higher takes more buy side liquidity. And immediately you see how price starts going aggressively lower. We see clear displacement, fair value gap created in here, market shift. And that's our fair value gap. That's an area where we can look for lower time frame entries, right? What do we have already? Let's use that one, although that one's not visible. Let's use that one. Let's just leave for that one. Run and stops. 5-minute market shift and fair value gap. It's actually 5-minute or 15-minute market shift and fair value gap. We have 15-minute market shift, 15-minute fair value gap, where it has to be. And then 3, price trace back into fair value gap. Let's see what happens on 3. Trace back into the fair value gap. This is the first mitigation on the fair value gap. Does it cause an impulse lower? It does. Does it create a fair value gap? Does it create a market shift? It doesn't. It goes higher. High is taken as buy side liquidity. Do we see aggression? We definitely do, right? We're waiting for market shift and a fair value gap. We see aggressive move lower, market shift, fair value gap in here, fair value gap in here. Either way, you could have executed on this fair value gap, which is valid, right? So ideally, we'd actually enter on this fair value gap with the stop loss all the way up to the high, or a tiny bit more aggressive, waiting for price to actually get all the way up to this fair value gap, which could have made you miss out in an opportunity if price wouldn't get up to this one, right? In this case, it does. And target, just following the trend, would have been nice 8.3R. More aggressive, could have been going for this low, but I don't think I would have gone for that. And that would have been 10R, made in a couple of good hours. 2 hours and 30. That was almost 40 minutes. And but where's 5R? What I probably would have done through this trade, you see how we have a couple of mitigations or a couple of lows here together. I probably would have aimed for that, maybe this one, but we're getting close to 4R on that one, so 4R probably would have been my target, making that a 4%, and or just going all the way down to that low, tops 8%, but at 5%, I would have closed probably around 70-80% of the position to then allow the rest to run all the way down to that, right? Again, the 5 steps, just as I've talked about them. And now let's discuss what happened through New York today, which at the beginning it was boring. At the end of the kill zone, actually, we never really got opportunities if we used the kill zone from 7 to 10. right? If we use it from 7 to 11, we do. If we use it from 7 to 10, we don't, right? Because the session ends here. And actually, it's not that bad, right? Because the fair value gap is created, price finishes the kill zone inside of fair value gap. So probably we could have taken advantage of it, whether we use the 10 a.m. mark or the 11 a.m. mark, honestly. So yeah. So what do we have? Price starts going higher. We have where's the open on this one? New York open. Also, midnight's open is right here. So based on New York's open, we are on premium prices. Based on midnight open, we have premium prices. We have run and stops running above London's high, pretty strong high. Aggressive move lower, clear displacement. And we look for the market shift, right? And now we look for the fair value gaps. We have 1, we have 2, we have 3. If you watched my video, you know that whatever happens in between this low and this high, the move that actually causes the break of the market structure, or well, the market shift per se, inside of here, that's where the fair value gaps have to show up. Does the fair value gap, the price mitigated in respect, happen inside of these two levels? It does, right? So price trades inside this fair value gap. Let's look at the lower time frames for that. Mitigates it, no fair value gap, no market shift. Mitigates it again, no fair value gap, no market shift, no fair value gap, no market shift. Aggressive move lower, maybe a market shift below that low. I think I would have considered that as enough, right? But no market shift, sorry, no fair value gap, right? Actually put price to front. No fair value gap, clearly. And then you see this, right? Maybe we wanted to consider this as a market shift. Whatever we wanted to consider it, it definitely happens, right, with this move. And basically, again, I would have considered this one. And this is basically the fair value gap we could have taken advantage of. Execution would have been quite precise to the tick. Stop loss should have been just about this high, plus 3 or 4, however you feel. And targeting this couple of lows that we have here to the left. This all was mentioned through the Telegram, this target per se, and the trade. Well, the trader wasn't able to take it, sadly. I wasn't at home, I was actually getting my getting a haircut. Wanted to take it on paper trading, but my execution, I left it somewhere around here, around the 50% of this fair value gap, not because of any kind of confluence or anything like that. I just wanted to have the stop loss all the way up to this and have a better risk to reward ratio, right? So that was a 4R as well. But I was doing it from the phone, outside of home, so nothing for me to do, really. Lovely trade. As you can see, I think that if I would have taken this, my target would have been closed right here, or I would have closed at least 80% as mentioned through the Telegram, to then move my stop loss to break even, which means that I probably would have ended up with a 3% profit around here, and then a break even on the rest of the position, or again, an entire 4.2% profit, right? That's the sell. And the buys, let's actually talk about the buys, because we did have opportunities to buy through the day. Clearly, not clearly, but a clear run on sell side liquidity down here. All right. Have already this low, price respects that low, causes a pretty aggressive move, that's clear manipulation. Price takes that liquidity, starts going higher. You see already a mark a fair value gap in here, but there's no market shift in the 15-minute. The 5-minute does have a market shift above this high, likely. And fair value gap, we have a tiny one here, but keep in mind that I trade from 8:30 to 10, right? So the trade, not the trade, price doesn't mitigate that fair value gap in my time frame, or well, yeah, the time where I'm actually looking at the charts and looking for opportunities. So for me, that's not an opportunity to take advantage of. But if you want to go safer and consider this as our lower high, lower high, then the lower low, and this is the higher high, right? Basically breaking above this high, then this could have been a nice fair value gap that, again, as you can see, doesn't trade back into. And my target, if I managed to buy or to get into a buy here, would have been this high. Could have we gone further than that? Yes, but well, yeah, we actually look at those couple of equal highs. Really clean equal highs right there, right? Zoom in a little. Really clean couple of equal highs, right? Barely nicked the high on that one. But yeah, that would have been this would have been my bullish target. Maybe could have tried to go all the way up there, but that would have been quite aggressive. And the reason why I completely avoided the buys was because I was already pretty interested in the sells, right? We see pretty nice aggressive move to the downside and everything. And then, well, the lower time frame entry was a little bit complicated in the sell because the stop loss was pretty large. Stop loss was really large for us, right? Where's it? Okay, yeah. Because the entries here, stop loss has to be aggressively up here, conservatively all the way up there, right? Now retracement would have been a little bit difficult if we would have had our stop loss not at break even. But as you can see, 5-minute fair value gap, press trace into it, and then a lower time frame entry as well. In my opinion, this is a really good market shift. This low actually, but well, it is the swing low. This little bit of a candle. Fair value gap is right here. Stop loss ideally above this high, aggressively above this high, but I think I would have left it on that one. Targeting a list this low, looking for that lower low. That's 3R. So I got two things to do here. I either remove my target to get 4R, which wouldn't be that safe, honestly, because we're just looking for that lower low, or just put my entry a bit higher to get that 4R, which is also a little bit aggressive as I could be missed out. In this case, that would have not been the case, but well, you really never know. That's today's price action. Sadly, wasn't able to take advantage of it. Neither the New York trade nor the London trade. I was, as mentioned through the session, had to leave the house, and I did show in there the execution that I tried to take on the sell here, right? But basically missed out by a few ticks or maybe 2-3 pips, but it is what it is. Honestly, I do like seeing this strategy working out both in London's trade and in New York, right? Sad that I wasn't able to take advantage of it, but well, it's there, so I'm happy to see that, and that is really pretty much it. Hope you enjoyed this video. Hope you took something away from it, and I'll be seeing you on to the next one.